our last conversation was around chapter 3, which we started by way of introduction. We started the third chapter on the rules of professional conduct, and we were able to introduce section 1 of unit 1, speaking to the introduction to the rules of conduct for professional accountants before we halted that section on Monday. So we couldn't meet on Thursday, and that is why we're having this makeup class today, so we can reach out, because there is no time, and we are just in chapter 3. We have 16 more chapters. We need to run fast, and that's the reason for this makeup class. Okay, so section 2, based on unit 1, we'll be speaking to the fundamental principles of the International Ethics Standard Board of Accountants Code that was issued by the International Federation of Accountants, which has been a roadmap and a guide for all accountants globally. I would like to make it interactive, and I would like to hear your thoughts on some of these principles and how they resonate with you. So we'll make it a bit discursive and much more engaging, so we can learn from our wealth of professional experience concerning this very sensitive subject. All right, so speaking to the fundamental principles, they are not new. We are aware of them, especially some of us that have come through the foundation, the skills, even secondary school. Some of these things I was aware because I took secondary school accounts. I took audits. Part of some of them came in accounts and some other areas. So I'm aware of these principles right from secondary school. So let's just speak to them and let's see how or hear how they resonate with us. So the fundamental ones, number 1 is integrity. Integrity. So in your own words, what does integrity mean to you as an accountant, as an auditor? What does integrity mean? I'd like to hear our thoughts. What does integrity mean? So please feel free, unmute your mic and speak freely without any fear of reprimand. So go ahead and share your thoughts very freely. What does integrity mean?
Hello, good evening, sir.
Yeah, good evening.
Yes, sir. If for me, if I tell you I've not gone through all of this before now, I would probably be deceiving myself.
Wow.
And just like you have displayed before now, usually we always have the word straightforward, honesty, and just doing the right thing. Keeping to whatever is ethical, So basically, because I have it here, integrity simply means where a professional accountant is expected to carry out business transactions in truth, in honesty, and be very, very direct in all professional responsibilities, just in a nutshell.
Exactly. Thank you very much for those powerful thoughts, and they resonate with me. I agree with you absolutely. Even though we had it on the screen, you still said some things that were not on the screen, which I agree with. Is doing the right thing even when no one is watching. Doing the right thing, which always we have threats and a lot of setbacks. People will want to push you to do the wrong thing, and that means you're trying to ensure that the right thing is done at all times. Thank you very much, and I agree with that. I agree with that. Any other thoughts on integrity? Any other thoughts, please? Unmute your mic like he did and speak, please, freely. Any other thoughts? Okay, I absolutely agree with his submission on integrity. So let's move to the next one, objectivity. Who can speak to that fundamental principle? Who will speak to objectivity? What does objectivity mean for professional accountants, for auditors, especially in the auditing space? We face a lot of pressure. Auditors face a lot of issues, especially trying to pocket the auditor, not to reveal something. So what does objectivity mean in your own words? Of course, we have the slides from the study pack, but what do you really understand by objectivity? Feel free, share your thoughts, and let's learn from your wealth of experience. And if you will not speak, I will start pointing names. I'll start calling names to unmute their mic and speak. So just like Sammy did, please go ahead. Okay, I think Sammy has unmuted. So maybe you want to speak to objectivity too.
Okay, let me just give it a try. Usually, when we talk about objectivity, one word resonates in my mind, and it's the word bias.
Yeah, exactly.
Plus also conflict of interest. But for me, I want to see it beyond just the definition. So I want to see, like, the fact that I am an auditor for a company for a very long time would not mean that because I have an idea of how the business runs, some of their challenges or issue, then by the time I'm supposed to make professional judgment, I now allow those things, those challenges, because I've been there for so long, to form part of whatever decision or judgment I make of that situation. I just want to tend to see the whole situation like I am not an insider. I have no stake. There's nothing affecting or influencing my professional judgment. So just objectivity, no bias, no conflict of interest or undue influence from any person affecting our professional judgment. My submission, sir.
Fantastic. Thank you for those powerful thoughts, and they actually resonate with me, and I agree absolutely with your submission. Aside what is on the screen, you gave a very powerful analogy of what objectivity is all about. If I'll pick your words, it's about being independent of whether the actions, activities of the organization affects you or not. No, you're there to do your job and go. So whatever insider information you got, it's not your business. I like that. Speaking to mostly accountants in practice. So that resonates with me and it speaks so much. Any other thoughts? I love Sammy's thoughts on this. They are very, very well structured and they are practical. I love them. Any other thoughts on objectivity? Objectivity. Okay, let me share mine. Like he said, it's not letting bias or conflict of interest or undue influence override your professional judgment. So objectivity is about being impartial. Your decisions are based on facts and evidence, not personal feelings or preferences. So objectivity is also trying to avoid conflict of interest. You are steering clear of situations where your judgment could be swayed or derailed by personal or financial relationship with the client or with anybody you're transacting with in the business space. Objectivity is also standing firm under pressure, not allowing clients, employers, or colleagues to influence you to make biased or misleading conclusions. So, for example, you are auditing a company where your close friend is the finance manager. Objectivity means you should either step aside from the engagement or take strict safeguards so that your relationship doesn't affect your independence or any conclusions you'll be providing from the audit or from the job. So integrity is about truthfulness, like Sammy opined, and I agree, while objectivity is about fair judgment. Fair judgment, very, very important. Okay, thank you for those thoughts once again. I just added to that powerful analogy you provided. All right, so what is professional competence and due care? Please. I'll prefer another person, not Sammy now. He has given us two powerful nuggets. So please, somebody else should go. Professional competence and due care. Can somebody share very freely? What in your own understanding is professional competence and due care? Please feel free to speak. I was telling them in the physical class I take in Kano today that one way to overcome stage fright, presentation phobia, and speaking in public is to speak when you're having forums or interactions like this. It helps you or helps us as accountants to be able, especially introverts like me. I used to be a very introverted person or introvert before. It's a challenge speaking in public. But then coming to the accounting space and being a professional accountant, I had to develop that skill to speak in public, speak fluently, make presentations to board, to committee, and that has removed that stage fright. Yeah, I can see my dear friend Julie. Yeah, please go ahead. Go ahead. Thank you. Go ahead.
Good evening, sir. Sorry I'm late. I just got in.
No problem. You're welcome.
Professional competence and due care means it requires having high knowledge and skill on a particular area of specialization and acting diligently too.
Exactly. I agree. Absolutely. I agree. And professional competence is very important. It's one of the very serious and required skill for accountants. I agree with your thoughts on that. Just to add more flesh to it, it speaks to maintaining professional knowledge and skills. So it's not just attainment, like we looked at in one of the, I think, topics, either chapter 1 or 2. We spoke about attainment, and we said you can attain it by what we are going through this process. You become ACA. Some people become ACAs, and that's the end. They stop learning after getting the qualification. No, there's the attainment level and there's the maintenance level of our professional development. So that we qualified and you have the certificate does not stop you from learning. Every year you have to attain 40 credit hours as a chartered accountant. What does that mean? 40 credit hours in mandatory continuous program of education, updating yourself. ICAN mandates you to keep getting updated with technical and professional standards that are updated year in, year out by IFAC, by ICAN. Currently, the ISQs are off. So for we professional accountants, or some of us in practice, we have to know the ISQMs. It's not that because I'm chartered, I don't need to know. So all these updates, tax has come, a new tax regime in Nigeria has come. You have to be aware because implementation date is 1st of January 2026. So all these updates come by maintaining professional knowledge and skills, and is at a level required to provide competent services based on current developments in practice, in legislation, and techniques. So we need to act diligently in accordance with applicable technical and professional standards. Yes, Kela, please feel free to interject. Go ahead. Yeah, Kela, your hand was up. I had to halt. You interjected.
Okay.
Yes,
okay.
Please.
Yes. Can you hear me now, sir?
Yes, please. Go ahead. I can hear you.
Yeah, professional competence and due care, it has rightly been defined, and then you also made mention of the fact that that has to be sustained by continuous education.
Yes.
But at the same time, I would just want to add a fact, and that is the fact that it also has to do with a professional accountant knowing his boundaries. That is maybe something that has to do with your boundaries in knowledge and expertise. Knowing fully well when to recognize that a task is beyond your capabilities and willing to consult, with competent hands. That is also a way of acquiring knowledge, knowing that, okay, I don't know this, but I can consult with some people that, have a broader knowledge on that. And then with that, I think it plays a good role too. It has to do with professional competence and due care. Knowing when, oh, this is my limit, but I can consult with other people to get this job done as a professional that I am. That's just what I wanted to add on that. So
I love that. I love that. Fantastic. Before I take you, Sammy, I saw your hand. That's also a professional competence or a skill to know that I don't know this. Accountants are not all well-rounded. So, for example, revaluation of assets, revaluation of building. You don't know the value of a building. You are not an estate or land surveyor. So it requires you, and that is where ISAs come up, and you need to be competent enough to know you need an expert. And that's what Kela is saying, which I agree. You need to be competent enough to know I need an expert to help me value this area I don't have requisite knowledge. So, and that's what competence is about. By the time you see an accountant going into land valuation, okay, this is what we have in the books. By this time now, I think land has increased. So let's value it at this price. Then he's going above his limit. That is not your area. So you need to be competent enough to know that this is my limit, like he said, and professional competence brings you to that. You tell the client, see, I can't do this job, but we will need to outsource as auditors to get professional knowledge in this area. So thank you for bringing that to the fore. I agree with you absolutely. Thank you for that. Sammy, can we have your thoughts? I saw your hand up, please.
Okay, so I want to look at it from the angle of the reason why we need this professional competence and due care. I was studying the other time, and I noticed one of the things they are telling us here is because we are accountants or auditors, we might need to work with standards. If we don't imbibe this, it might affect the kind of errors we make and also misappropriation of relevant standard. Exactly. So having the right knowledge and skills requires to discharge our responsibilities as a professional accountant becomes very important. Just to add up, sir.
Exactly. I agree. Absolutely. Very, very important. We need that because those standards could be mixed up. And that's why we need to also network to understand these standards in total, relevant to most sectors. These standards may not be applicable the same way you audit the FMCG space or the banking space or the mining space or hospitality space or healthcare space. So like you said, we need to really understand the applicability of these technical and our professional standards is very important. Very, very key. Thank you for those thoughts, and they resonate with me absolutely. Now, professional competence has two parts, and it's very important we know that understand we have to keep updating the knowledge and skill to perform our duties effectively. Continuous. Some people don't do it, and I wonder, they are chartered accountants. I'll be like, what's your credit hours for this year? And they'll be like, I don't really go through that thing. Then when it's time to become a fellow chartered accountant, upgrade, they'll now start looking for MCPDs. No, you don't do that. You keep updating. Of course, we need the MCPDs to be fellow chartered accountants for a lot of ICAN activities. It's fine. But for the love of the job and the profession, you have to keep updating. If you see my MCPD hours from when I qualified, I don't go less than the benchmark. Currently, this year is 40. I think I already have 67 credit hours, and we are just in August. National Conference is coming, I've registered. Northern Accountants Conference is coming, I've registered. Not necessarily maybe because I have the money. In fact, my current office does not pay for me. It's my former office that pays. But this year I had to pay for myself, because my current office does not have that provision. So I paid from just to get the knowledge. So with 67, if I add the other national and northern conference, I should be getting to maybe 80. So I've doubled my knowledge. ICAN's benchmark is 40, just to update myself. And that's what makes us relevant in the corporate space. So let's be professionally competent. And not just within ICAN, there are other journals. On LinkedIn, you get a lot of materials. If you're not on LinkedIn, please go on LinkedIn. I beg you. That place is a wealth of knowledge. You connect globally with professionals, not just from Nigeria, but globally. You share, you network, and you share knowledge. You see it from different perspectives. You see it from the developed world, the developing, and the underdeveloped. And you see how accounting is applied, and you learn. I post every day on LinkedIn. Every day I post. I'll post on my wall, and I post on different forums, platforms. Why? For the love of knowledge. And I learn. Most of the materials I told people I picked and understood internal audits about were from LinkedIn. They really helped me. So please, if you're a professional and you're working already, you're not on LinkedIn, then you are wrong. You are wrong. You are not on the right platform. Please, LinkedIn is better than Facebook. It's better than Instagram, in my opinion. That's where you get the requisite knowledge and connect with professionals for our day-to-day duties. So that's professional competence. Then due care speaks to applying the knowledge carefully, thoroughly, on time, in the client's or in the employer's best interest. Somebody, an FCA, also a fellow with ACCA, normally posts something on LinkedIn I love. He's a very powerful accountant. I respect him very much. Ajibola Jinedu. He used to say something about fraud and error. He said, fraud is intentional, error is unintentional, but they both have the same effect on the client or on your company. So if somebody commits fraud of 200 million, it affects the company. And another person commits an error of 200 million, it's the same effect. One is intentional and one is unintentional. Now, that unintentional mistake could be avoided by due care, applying knowledge carefully, thoroughly, on time, in the client's or the employer's best interest. So that's very important. We speak to this area of professional competence and due care very, very skillfully. Okay, so let somebody speak on confidentiality, and let's get your thoughts. Feel free to speak and let's share experiences. What is confidentiality in your opinion? Break out of that fear of speaking. Break out, please. Let yourself loose. There's no stupid opinion, and in my opinion, there's no stupid opinion, there's no stupid thought. We'll definitely pick something from what you said. Yes, please. AA, go ahead. I can
Good
see
evening,
your
sir.
hand. Yeah, good evening.
Confidentiality for
This
my
is not AA. Sorry to interject. This is not AA. Oh, okay. Mary Jane is speaking. Okay. Sorry, AA. I would like to hear Mary Jane. Apologies, you raised your hand first. I'll get your thoughts if you don't mind. So let's hear Mary Jane.
Confidentiality means that
Yes.
as a professional accountant, shall respect the confidentiality of his clients.
Yeah.
Like the confidentiality of information that he obtained through his professional relationship without disclosing it to the third party, unless there is any legal situation that warranted such to be disclosed.
I agree. I agree absolutely. I agree absolutely with your words. Yeah. AA, let's hear you. Please go ahead. Thank you, Mary Jane, for that. Thank you so much.
Okay. Thank you very much, Mary Jane. I think you have actually highlighted it. The fact that we are opportune to several information as professional accountants does not mean we should disclose every information that we have. And as a matter of fact, that does not make us give us the access to more or less like give insider information to someone that wants to invest into that business, knowing that we have one information or the other. So that needs to remain confidential as fast as possible. And that's why most companies, they sign confidentiality agreements so that they are sure that whatever they are doing with professionals remain a professional dealing and not petty talks, basically.
Exactly. Absolutely. I agree with both of you. Very, very true. So 3 things they said that resonates with me. Okay. Yes, please. Sammy, please go ahead. Thank you, AA, for those thoughts. Thank you so much. Sammy, please go ahead. Your hand is up.
Okay, sir. This confidentiality, I actually want to ask because there's the part that is saying confidential information should not be used for personal gains by the professional or third parties. Say, for instance, I am probably an auditor for a bank or thereabout. And from the exercise we carried out, it is looking like there's issue with going concern. And that I know of majority of these banks, there are times they want to give you job, they want you to open accounts with them, probably for your staff and all of that. Now, because I am part of this audit, and maybe by the virtue of opportunity, I was able to know that the going concern of this company is not smiling at all, and I withdraw all my money from that account of that bank.
Yeah.
Do we call that a breach of confidentiality?
No.
And have I used that for my personal gain also?
No.
Thank you
for that question. So my answer is no. And somebody else that maybe aligns with me or does not align, please go ahead. Why did I say no is that you got that information personally and it's not for your personal gain. You withdrew your money based on authentic information, and that information is not for your gain, it's for your safety. Let me use the word safety. It's a safeguard. You had something and you withdrew your money. But going about to say, oh, this bank is going to crash, there's problem, or withdraw your money, then I think there is a breach of confidentiality there. I think there's a breach of confidentiality there. So withdrawing your money based on that information, insider information, was not for personal gain. So for example, you hear they are selling shares, or you had an information on a contract or something, and you divulge it to a close party to gain. That's confidentiality breach, in my opinion.
So let's say I have a group of staff that are working with me.
Okay.
And they also remove their money because of that.
Yeah, so they too were part of the engagement and they were privy to those information. So you didn't divulge it to the group of staff to say, okay, see what the bank is going on. So maybe it's a group thing. You guys were doing your auditing and everybody came across that growing concern and they were like, I have account to this bank and we need to. So everybody personally decides to remove his money. I don't think that's a breach of confidentiality. You guys just did the needful for yourself. Not personal gain now, is for your safety. So it's not a confidentiality breach. Yeah. So let me hear Mary Jane's thought you shared on confidentiality. What do you think is my answer? Am I correct? Am I aligning with your thoughts to Mary Jane and AA? What do you say based on Sammy's question? Yes, AA, please go ahead.
Okay, basically, you are very much on point. Just like you have said, I will just put it this way, that so far you don't put it in such a way that you are now more or less like a financial advisor, advising people against that company that you have audited. You are privy to that, those information. So you are gaining something in that regard. But in this case, you are just like you have said it, safety and gain. Basically, those are the two things that differentiate the two scenarios. So if one is for safety and the other is for gain.
Thank you very much. I can see Grace's hand up. Grace, please go ahead.
Okay, sir. Please, talking about confidentiality matter in a client that an auditor come to realize while doing, I don't think that should be a matter to be kept confidential. It shouldn't be a secret because it should reflect in your reports that there is actually a going concern issue with this organization, which your report is supposed to be made public. So I don't think that should be part of the confidentiality issue we should be talking about, because going concern should reflect in your report. If you keep it secret, then there is an issue in your report. That's how I see it. I don't know if I'm right.
Yeah, you are right to some extent. But what Sammy was saying is he's saying something about he knows this bank has a going concern issue, and he's definitely, they are going to report that, but it goes to management, and management can decide to conceal. Auditors don't have the right to publish reports to the public. It's the management that publishes. So the report is to management, and management can conceal it. So I think what Sammy was saying, he's speaking to the fact that he used that going concern information to remove his money from Gabriel Bank. If Gabriel Bank has issue and he's auditing Gabriel, that bank, he will just remove his money. Then say, okay, well, the company, you guys are having going concern issue. For my own safety, I remove the money. But escalating it to the public is not in the purview of the auditor. Of course, he won't keep it secret. He will identify it as one of his findings and speak to those charged with governance on the impending doom he's seeing from the figures and from everything. Yeah, Sammy, you want to answer Grace? You want to share some thoughts? Your hand is still up.
Sorry,
okay.
No.
Okay. It's the old hand. Yeah, so Grace, auditors, we don't have the right to publish to the public our finding on the report. The report goes to management and we see how they resolve that matter. But then the report is already provided, which you rightly said. But escalation is a breach of confidentiality. You are not to escalate, especially when management is doing something about it. If they waded it off and said, we are not having going concern, your findings are baseless. So you move from management to the board, from the board to SEC and all that, but you don't really have a duty to the public to escalate from first instance. I hope you got some thoughts and understanding there on that.
Yes, sir. Thank you.
All right. Okay, thank you very much on those powerful thoughts on confidentiality. All right, so let's speak to professional behavior. Professional behavior. I believe we are learning from each other. Somebody should speak to professional behavior. Professional behavior. Anybody? Professional behavior. How do you see professional behavior as an accountant in... Okay, yes, Grace wants to speak. Yes, go ahead, please.
Yeah. Okay, professional behavior is a quality that is expected of a professional accountant to behave in such a way that do not discredit the profession or do not bring disgrace or disrepute to the profession or to other professional accountants. The professional accountant is expected to abide by rules, regulation, comply by professional ethics, fundamental principles, and integrity in carrying out his audit engagements.
Exactly.
In such a way that he follows all the expected rules and regulations and standards and ethical principles that is expected of a qualified accountant. Thank you.
Exactly. Thank you very much. Absolutely. So 3 things I can pick from your thoughts. Comply with relevant rules and regulations in all your professional and business activities. I agree with that. You said that. Also avoid any conduct that will bring disrepute, discredit to the profession or undermine public trust. The next thing you hear is, and he said is ICAN. And he said it's ICAN because that brand has this high level of expectation from you. If you say something about the other sister profession, they'll be like, of course, they don't have standard. But when you hear ICAN in the business space, it's the expectation is always high. So we must uphold, like she said, the good reputation of the accounting profession through all those she listed: honesty, courtesy, and professionalism in all our dealings. So an example, for example, if you disagree with a client on the client's decision, handle it respectfully and professionally. You don't post negative comments about them online or act in a way that harms the profession's image. So in short, let's be lawful, be respectful, and be a good ambassador of the profession at all times. That's what professional behavior speaks to. And Grace nailed it. Thank you very much for those powerful thoughts on that. All right. Thank you for the engagement. That was powerful because we needed that to look at this fundamental principle of the International Ethics Standard Board of Accountants Code. All right. So let's look at the requirement for independence. The requirement for independence. An auditor must be independent in mind and appearance for report to have value. So if we're not independent, if we are influenced, like we spoke about in objectivity, our report will not have value. So we must be independent in mind and appearance. Independence of mind speaks to being unbiased in your conclusion. You are stating the fact. And independence of appearance is avoiding circumstances that will suggest you compromise objectivity. So that public's confidence in you, in the audit process, is the key. So the public must have confidence in your audit when they mention your name or the brand of that company, so and co. And that's why most of the big four resonate with the public, especially big companies. They will tell you we don't do anything than big four. Even though there are lapses in most of their audits, they will still tell you we still prefer the big four because of the confidence they have in that brand, in that name. Yeah. Most of us will say, those guys don't do audits. They will send us small children to be asking us stupid questions. But then the brand over time has built a name. So the public will tell you, no, if it's not the big four, we don't want. So as accountants, let's have this at the back of our mind. Independence of appearance, independence of mind in doing our job objectively. And that's the requirement essentially for independence. So when independence comes to your mind or a question, think of these two: the independence of mind and the independence of appearance. The mind speaks to your unbiased conclusion, and your appearance talks about uncompromised objectivity. And that is why a lot of people will tell you in the audit space, especially internal auditors, they say, if he's friending you or coming close to you, be careful. He wants to get information to nail you. No, we are not nailing you. We're just being objective. That we are close to you as process owners does not mean we want to use it against you. If we find something you are doing wrong, of course, we would try to correct it. But then they will say you are reporting people. We are just being objective. And you see people try to avoid internal auditors and all that. But it's just objectivity. We can't see something go wrong and keep quiet. So that confidence in us to say it as it is the independence of mind and appearance, and is the requirement for independence. Okay, so the next section, speaking to threats to independence. We always have threats, and these threats are always in the accounting space and the auditing space. The threats to independence situations that could compromise our objectivity, number one, is self-interest threat. So can somebody share your thoughts on self-interest threat? We have 5 of them, we know them, and they are always there. They are always there. And some of us fall to them, and some are battling with how to resolve some of these things. So what is self-interest threat in your opinion? Self-interest threat. Please share freely. What do you think is self-interest threat? Yes, Keller, please go ahead. Thank you. I think you're not audible. Maybe you're not muted. Okay, yes, you are muted.
Can I be heard now?
Yes, we can hear you. Thank you. Please go ahead.
Okay, yeah. Self-interest threat. I think I would say it occurs when a professional accountant or their firm has a financial interest in a client. Let's say, for example, an auditor holding a direct financial investment in the company they are auditing. Or put on another way, maybe fees from a single client, should not be so significant that they create a financial dependency on that client. I think something like that constitutes a self-interest threat.
Yes, yes, I agree absolutely. So just to add one or two thoughts on that, it's a professional ethical issue because it refers to a threat. And that's why it's a threat, because your interest affects your objectivity that arises when you have personal gain or benefit that could influence or becloud your judgment, to be perceived to influence your professional judgment. So like he said, an investment in the company you are auditing, it's a threat, it's a self-interest. So an auditor, like owning shares in a company he's also auditing, may be tempted to consciously or unconsciously overlook negative findings so their share price don't fall. So in short, like he said, I agree, when your interest could becloud your professional decisions, that's a self-interest threat. Exactly. Thank you for that clear explanation. Okay, so who wants to speak to self-review, please? Somebody should speak to self-review. What is a self-review threat in your own words? What is a self-review threat?
Self-review threat is a threat that occurs as a result of an auditor. Can you hear me, sir?
Yes, please. Go ahead, UK. We can hear you clearly.
I said it's a threat that can occur as a result of an auditor employed to review a work that he has already performed previously.
Yes.
Let me explain further. Let's assume a situation where an audit firm is engaged by the same entity to carry out accounting functions or compilation functions like tax computation, preparation of financial statements and all that. And at the end of that preparation, it's still the same auditors that will be called to review their work. So the auditors in question will not be able to, will not be able to pinpoint where they have gotten it wrong if such a thing occurs.
Exactly.
They're more like, they can't tell themselves, they can't tell the owner of the organization, okay, this is wrong, because they prepared this financial statement.
Yes, yes, absolutely. Exactly. Thank you for those thoughts, powerful thoughts. I saw AA's hand flash. AA, please go ahead.
Yeah, I think she has highlighted the stuff. It's basically about getting same person that has more or less like, I prepared the books and I'm still auditing the same book. So how am I going to review myself? So it's basically that.
I like that word, review myself. Exactly, review myself. How am I going to review myself? Thank you. Yes, Grace, please go ahead.
Okay, I would like to use your words. I remember some days back, we had lecture, you talked about this self-review. You talked about an auditor being the maker and the checker. I noted that word. I think that is an example of self-review. So a situation where an auditor is the one re-evaluating a work he has done earlier on in the past.
Exactly.
He will hardly criticize himself. He cannot criticize the work he himself have done. So that self-review threats will be really there.
Exactly. Absolutely. Thank you very much for reminding us. I also love these words of my CEO, my former CEO in the healthcare space I work. He said, you cannot be the judge and the jury at the same time. I love those words in explaining self-review. So maker and checker, then you cannot be the judge and the jury. Exact point that speaks to self-review. And it also comes to day-to-day operation. I remember the scenario in the office where I raised a petty cash voucher to buy something for a boss that came. We had my audit boss came from Abuja to check one or two things I was doing in Kano. And I wanted to buy, I sent for lunch. He said he doesn't eat from people he don't know. So I was like, oh, okay, if I buy it, he said, hey, except it's me. You know, auditors now, you're always scared that process owner. So he said he doesn't eat from anybody except his people. So I said, okay, I'll go buy it. So I picked IOU from finance. I took the money, went to the restaurant, got him something, and came back. So in filling the IOU, of course, nobody will fill it except me. Now, you have the maker on the IOU, on the petty cash voucher, who is the person that raised the issue. Then you have the checker, which is the internal auditor. Of course, I'm always checking. I think that was the first time I'll ever raise a voucher. So I raised it. I'm not supposed to check it all at the same time. Sign the raised by, and I also signed the reviewed by. No, that's a self-review threat. So I took it up because I'm the only audit team member there. I don't have a colleague. So I was the only one in that office. So I took it up to another chartered accountant, and I gave the finance manager, review this. I submitted the receipts of the lunch and everything. And she looked at me, but I'm not auditor. I say, yes, self-review. And she laughed. She just signed it. But that's practically, it may sound humorous and very little, but that's how to follow due process. By the time I raise, I signed. Check, I signed. There's a self-review threat there. So if external auditors see that, they'll be like, internal audit, you should know better. Why will you raise a particular charge? Of course, maybe it's ignorable or very minute, but then you should know better. You can't raise and review. Of course, there's somebody approving, because on those vouchers, you have the three line, the maker, the checker, the approver. You can't raise, you can't review. You can't do two, you have to do one. And that speaks to segregation of duties. So to safeguard against self-review threat, there must be proper segregation of duties, a powerful internal control area that speaks to control activities. Segregation of duties is a pivotal safeguard to mitigate against self-review threats. This is very important. Thank you very much for sharing those thoughts, and they resonate powerfully with me. Okay, so somebody should go for, I hope I'm not missing anybody that raised his hand. Please, if I skipped you, don't mind me. This is one way we could share thoughts, and it will help us break out of our shell. A lot of people don't want to talk in public. They don't want to talk in platforms, and it will affect your presentation mode. Once you qualify, man, there will be expectations. So please start learning how to speak in public. Start getting out of your shell. Break out of it. Then I will encourage you to read the book, Effective Public Speaking by Dale Carnegie. That book helped me. I bought it. I ate it. Because presenting to boards, man, when it's time for board meeting, I will be afraid initially. What will I say? How will I say it? How will I project my slides? How will I speak to the slides? You can't go and be reading the slides. I have very intelligent people on my board. They would halt you and shut you down. So these are little forums and areas where we could address those fears, those phobias. Speak freely, speak. I've said so many stupid things on forums and people corrected me, but I learned from it. Of course, you must start from somewhere. So as chartered accountants, please feel free to speak so that it can help your effective presentation, your public speaking, and the likes. Okay, so who wants to talk to advocacy threat? Somebody speak to advocacy threat, please. What, in your opinion, is advocacy threat? Advocacy. Yes, please, go ahead.
Advocacy threat is a situation where an auditor is in a position to advocate for his clients. Let's assume a situation where his client is possibly going for a loan from the bank, which the bank requires an audited financial statement. And the client is insisting that the auditor will follow him to the bank for the loan to speak for him, right?
Yeah.
So an auditor will face an advocacy threat if he knows that, let's assume in a situation where he knows that his client is not doing well financially, but he is advocating for this bank to give him this loan, knowing fully well that he cannot be able to pay back this loan. I don't know. That's what my thoughts. Thank you.
Absolutely, I agree with you. And whether it's the bank is even doing well or not doing well, he's not supposed to advocate. So stay clear. Not doing well will even worsen the scenario to go and advocate. So even if his bank's books are top-notch, the figures are okay, you don't have any business advocating. You've stamped, you've signed your opinion, You don't follow your client to the bank. You are like guaranteeing the loan or guaranteeing the client. So absolutely, I agree with you, UK. And case studies come in this form. So take note. This her answer. It's a practical case study I've read, and it came like that. So please take note of it. It's an advocacy threat. It may not be presented as advocacy threat, but that's what most of this scenario paints. Yeah, I think it was AA that raised his hand. AA, did you raise your hand? Somebody raised his hand trying to say something when Grace spoke. Somebody was trying. Please go ahead. Let's hear your thoughts.
It is the other AA.
Oh, okay. All right. Please go ahead, AA. The second AA. All right. Evening.
So I just wanted to add to what she said. Was it add, or I picked a point where she said where an auditor is in a position to advocate for it. And now I wanted to say that an auditor should not be in the position of advocating for a client, regardless of
the position.
How the position, yes.
Exactly. Thank you for adding flesh to that. And thank you, UK, also for using those powerful illustrations. They are graphical scenarios that happen in practice. So a professional accountant or an auditor promoting or defending a client's position or interest, to the extent that their objectivity and independence could be compromised, is what advocacy threat speaks to. And that should not happen. So that example, you can see a lot of examples on the screen, on the study text, and it speaks to what you could do to jeopardize your objectivity. And it must be avoided at all cost. And also, an auditor, like for example, represent a client in a dispute with tax authorities, or actively markets the client's shares. You see, these are scenarios that could come in the exam. She spoke of a good one on loan. So having dispute with tax authorities, saying, the tax computation is wrong, you computed wrong, you cheated you are there to provide your opinion, not to have dispute with tax authorities or marketing the client's shares to potential investors. Come on. They could be seen as taking sides, making it difficult to remain unbiased in later evaluations. So in short, as auditors, it's like being both the referee. Advocacy threat is like being both the referee and the team's cheerleader. It's hard to stay neutral. So stay clear, do your job, provide your opinion as an auditor, and leave every other issue. If you have issue with the tax computations, let them employ a tax consultant to do the job for them, not you. So those are scenarios that could be presented, and let's try to take note. Okay, let's run before we go on break. Let's speak to intimidation quickly. Intimidation threat. What do we think intimidation threat speaks to? Intimidation threat. Yes, please, Grace, go ahead.
Okay,
go ahead, please, Grace.
Intimidation threat. Okay. Intimidation threat is a situation where an accountant is threatened by management or clients to act against his will, or otherwise lose the job, or his life, where his life is in danger or something. So that's intimidation threat by either the management, a staff, or the client itself.
Yes, you shared some thoughts. He's intimidated by either losing his work or a threat that affects him personally and not the job. Personally. All right, Sammy. Yes, let's hear your thoughts, please.
Just want to be brief. I want to pick it from the angle where anything that doesn't make a professional accountant objective
exactly
becomes an intimidation threat.
Yes, absolutely.
Yes.
Absolutely. Thank you. You just said it in another way Grace said it. So it arises when a professional accountant is discouraged, is intimidated from acting objectively. Simple. Because of actual or perceived pressures, threats, or influence from others. Very simple. So, for example, if management hints that the accountant's contract or promotion prospect depends on giving a favorable audit opinion, I mean, That's an intimidation threat. Or the management team saying or subtly warning the auditor about negative consequences for raising certain issues. You can see that the accountant may feel pressure to compromise his judgment. So in short, it's when someone tries to scare your professional skepticism out of you. Simple. Someone is trying to scare your professional skepticism out of you. That is intimidation threat. Very, very succinct. Thank you, Grace. Thank you, Sammy. And finally, familiarity threat. Familiarity threat. Let's speak to that. Familiarity threat. Familiarity threat. What is familiarity threat in our opinion? Yes, Keller, please go ahead. Thank you.
Familiarity threat, I think this comes in, or it can develop from a very long standing or close relationship between a professional and a client. You know, sometimes long-term relationships beclouds objectivity. Family ties or close friendships, you know, these sort of things can make it difficult for a professional to be very objective in his work. You know,
I like that. I like that. So that's clear. Yes, please, Jonathan, provide context. Thank you, Keller, for those thoughts. Jonathan, please provide context. Go ahead. Thank you. You are muted. If you are speaking, please unmute and speak, Jonathan. Thank you. Maybe he's finding it difficult to unmute. It could be challenging at times, maybe network or something. Okay, AA, the second AA, please go ahead. AA, please go ahead. Maybe we'll get Jonathan later.
Adding to the
Hello.
Okay, AA, hold on, please hold. AA, sorry. Okay, Jonathan, go ahead. Yes, we can hear you. Yes, we can hear you.
Good evening, sir.
Yeah, good evening. Nice to have you on the call.
Thank you. Thank you, sir, for your sacrifice. Really appreciate. Yeah, familiarity threat, to my own understanding, is a threat that arises as a result of long standing, or when an auditor has been auditing the company for a very long time, probably over 5 years, and he has become so familiar with the employees, the board of directors, and almost everybody in the company. That's one aspect that I view it. Another aspect is it can also arise when an auditor is auditing a company which is very familiar already. He may not have been the auditor before, but probably he has been a customer, or he has been in relationship. It might be business relationship or otherwise with the company or part of the employees of the company. Thank you, sir.
Thank you so much. Thank you for those thoughts. They resonate well. Thank you. AA number 2, please go ahead.
Actually, it was what Jonathan said. So just to add to it, saying that when the independence of the auditor is being impaired, like still having a in sense like having a long-standing relationship with his clients.
Exactly. Absolutely. Absolutely. I agree with all our thoughts, 3 of us on that. Jonathan, you want to add to that? Your hand is still up. You want to add to those thoughts?
I'll put it down.
Oh, okay. Okay. Yeah, Sammy wants to add to that. I appreciate the engagement. Sammy, please go ahead.
Okay, sir. So with regards to familiarity trait, there's this text I went through that I saw something cool off period. And that cool off period, they are saying it's more like a safeguard to familiarity trait. I don't know if you have an idea about this. Now, I got the understanding that the auditor who have served for a period of time, in order to avoid familiarity threat, they give him this cool-off period. Another audit firm or thereabout, or probably another set takes over. Now, my concern is the way I got it, they were saying another audit firm, but I am thinking probably another set of auditors. I don't know if you can help throw small light on that.
Okay, thank you very much for that question. And the three of us that initially spoke to familiarity threat spoke to it very, very pragmatically and clearly, very succinct. So I think it happens when a professional accountant or an audit firm become too close or sympathetic to a client or a colleague or other party's interest, making it harder to maintain objectivity and professional skepticism. So that's generally what familiarity threat is all about. So for example, you've worked with the same audit client for many years, 10, 15 years, and you have a close friendship with the CFO, who you might unconsciously overlook his errors or her errors, or avoid challenging their judgments because of the relationship. So in summary, when knowing them too well makes you less likely to question them, poses a familiarity threat. That's for the external auditors. There's a rotation rule mandatory. So some firms say 10 years, some 5 years. My formal space company is 5 years. So once you've audited, and we do the big four only, we only do big four. Currently where I am, we do big 5. So where I was formerly is the big 4, and you don't audit us more than 5 years. I think corporate governance states 10 years max globally, and I think locally. The max you could audit that company is 10 years. You cede it to another auditor. So now, in speaking to Sammy's question on cooling off period for auditors, the cooling off period talks about the mandatory break an individual must take before moving into certain roles with the former audit client to reduce the risk of familiarity threat or conflict of interest. So the idea is generally, if an auditor was heavily involved in auditing a client's financial statements, they may carry or might carry biases, knowledge of weakness, or personal relationships that could compromise independence if they immediately join the client's management. So generally that cooling off period is a mandatory break, but then mostly is seen from the area of joining the client's management. That's what the cooling period talks about. It's not necessarily to stop and come back again to the job. It's maybe you want to transit, maybe you are the auditor and you're given a job, or you are being offered, of course it happens, as maybe the external auditors or the client's auditor, and they like the way you audited their financial statements. You could prepare it. So there's a cooling off period before you're able to join the client's team. So it's two-way in the sense that you could cool off by stopping the engagement, or cool off also before joining your client's team. So there's a mandatory period you have to stay before you join. So it's two-way in speaking to the cooling off period. So like the former space where I worked, 5 years, if it's KPMG, the next one is another big 4. So we first did PwC for 5 years, we moved to EY, and from EY, another company will bid. So those periods are also looked at as cooling off period before you come back. But as a matter of policy for like the former company I worked for, they must use the big 4 before coming back again. So after the other 3 have been engaged, they'll still come back to the first one. So there's possibility of reusing that same auditor, but then they have to be rotated mandatorily. And this is a safeguard against familiarity. I hope I've been able to address some of your concerns, Sammy. Hello, Sammy, are you
Yes,
there?
sir.
All right. Thank you very much.
Thank you, sir.
Okay. All right. You're welcome. Okay. So we've taken like 6 minutes from our break time. So let's go on a short break so that we'll continue the conversation by, let's say, 9.